And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to The Money Show, your first edition for the week. I'm Stephen Grootes. We'll speak to the CEO at Omnia in just a moment. Seelan Gobalsamy already on hold for you. Also, one of those days where there's just result after result. The thing that stood out for me amid all of them, and they're all very interesting and stories in their own way that tell you something about our economy, is I honestly cannot for the life of me understand how it is that the SA Rugby Union loses money in this environment. I mean, wherever you go, people are still talking about rugby. I mean, we've had the World Cup for 6 years now? We're still talking about it. And yet, somehow, they've lost money. I mean, there's a cynical part of me, and I've got no rational justification for this, but a cynical part of me suggesting that maybe it's all justification for some kind of equity deal because, but the rational part of me is really, it tells you there's something wrong with the model. And Formula One is doing very, very well at the moment. Everyone's talking about it. Golf is golf. Football is, on top of everything. Cricket has its own factors. So I wonder what's going on with the sort of global finances of global rugby. We will dig into that in a little while. The construction company, let's call it the cement company rather, a PPC, they reported higher profit with less revenue. We'll ask their CEO how they did it. They had quite a big restructuring. The thing that stood out for me, though, was that the volume of cement that they sold was down slightly. Now, it's back to the question around construction. You heard on Friday from the South African Institute of Civil Engineers. They've constructed an index to measure what I suppose you would call construction activity. I think the US has a number called New Starts, how many building projects started in a particular month. But they've put together an index, and that index, the index here, shows that, in fact, there's less construction activity underway now than there was in 2014. When was our population higher? Now or in 2014? Yeah, I mean, that really tells you the situation that we're in. And I did wonder if part of PPC's problems is just that we are not, as I look out into the darkness around me, a construction site.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
It would be good to hear from you this evening, by the way, on 011 8830 702 021 446 0567 and voice notes on 072 702 1702. Well, the mining, chemical and agricultural group Omnia giving higher dividends to shareholders for their financial year to the end of March. Its mining and agricultural businesses are doing very nicely. Has had to spend nearly 100 million rand restructuring its chemical business. Also, it seems in a bit of a dispute with SARS. The CEO at Omnia is Seelan Gobalsamy. Seelan, good evening. Good to talk to you again. Obviously, strong results from you today. Your mining sector making bigger profits. How have you been able to do that?
Yes, good evening to you, Stephen, and good evening to your listeners. The star performer in our results today is our mining business. Our mining business has shown 41% CAGR over the last 5 years. How we've been able to do that? Three things. Firstly, we've been growing our core explosives business in South Africa, Canada, Indonesia, and Australia. We've also been growing our mining chemicals business. That business has benefited from new contracts in the copper belt and also in Namibia, with the uranium sector coming back on track. And then finally, our manufacturing and supply chain has done an incredible job to demonstrate the reliability and the redundancy in our supply. And we've been able to grow our wholesale sales into the explosives market. And those three factors together has resulted in this great performance from our mining business. What it does is it moves our business to be 60% mining, 40% agri, so a much larger mining business that Omnia has now. It helps with our diversification, and it actually is the underpin of our higher quality earnings and our strong cash generation in this financial year.
In your agricultural segment, you make the point that your nutriology model is central to the value of your product. What is so special about that?
Yeah, so nutriology is actually a word coined by our own agronomists and engineers, and in essence, what it is it's us trying to create value for our farmers by ensuring that they use less water, less nutrient, and actually enhance the output and the yield from agriculture and from the farm. We've been able to be very successful with that, doing it for over 30 years in the South African environment, and we've been able to export that concept into Brazil and Australia as well. So it's really enhancing yield by using less nutrient and less chemical. Sounds a bit counterintuitive, but I guess ultimately what we want is more output, which will allow more food and to help with population growth that needs to be fed.
I mean, there must be a lot of competition. There must be other people trying to do what you're doing also in those markets in Brazil and Australia, especially Australia. People will always be looking for ways to save water.
Definitely. I think there's always a lot of competition. I think Omnia's business is based on science and technology. So anything we put out and we take to our customers has been extensively tested with trials, with analysis, and with data. So our farmers benefit from that research and that innovation, and benefit from the science that backs the products and the solutions that we sell and produce.
Revenue from your chemicals division was only up by 2%, and you've gone through a restructuring process there. How different is that division after the restructuring?
Yeah, so our chemicals business, which is the smallest part of Omnia, it's been a business that we've owned for a number of decades, but a business that we've really battled to create success in. A few things have driven that. The manufacturing sector in South Africa has been incredibly weak. We don't see a lot of manufacturing growth. So over the last few years, we've considered what we do in the business, and this year we made a decision to accelerate an execution of a new strategy. And there are three components to that. The one is we have closed down a part of it, unfortunately, which is sad, and that's the 100 million restructure cost that you see coming through. The second is we took a part of that business and we're going to keep and continue with it going forward. And that business will generate profits for us in 2027 of circa 100 million into the future. And then the third is a business that we've put a band around it, and we've signaled that we will sell the business. So we've marked that as a business for sale, and we're quite far down the track to execute on that. What it will mean is in the future period, we will have an additional cash release from that business, working capital, debtors, and then a value from the sale.
Seelan, you mentioned in your SENS announcement you're in a dispute with SARS. Goes back quite a few years, actually. I think to 2014 is the sort of start date.
Yes.
And you're clearly putting up a robust defense. You clearly believe that you're in the right here. I just wonder if maybe it's a bad time to be in a dispute with SARS, because they are clearly trying to get more money from more people, or let me put it a different way, trying to get more people to pay the tax they believe they owe. May just be a bad time for a dispute with SARS.
Yeah, whilst we are in a dispute with SARS, what I can tell you is that revenue authorities across the world all do the same thing. So we can certainly chuckle about it, but we operate in 26 countries, and I think revenue authorities in all of those countries will want to get their pound of flesh from corporates. However, where we are with SARS, we're a responsible citizen, so we would like to resolve this via the alternative dispute resolution process and come to an agreement which is amicable to both parties and fair. Should that not be the case, we will then go to court and go down that process. However, I'm still confident that our teams will eventually reach a solution that makes sense. We've obviously considered that when we think about our provisioning and how we think about the cash flows and all of that. And with that all in place, we still have a very strong cash position, and we've been able to declare a good distribution to our shareholders.
Seelan Gobalsamy, thanks very much indeed. CEO at Omnia.
7:02.
7:02.
Stephen is on The Money Show.
6 to 8 p.m.
A report in Business Live today that the SA Rugby Union, SARU, technically insolvent, made its biggest loss in 30 years last year, despite the fact, and I've made this point already today, I don't think there's ever been as much interest in South Africa, in rugby in South Africa, than there is now. The information comes from a letter to unions that belong to SARU from the CEO, Nqobile, in which he says most unions are making losses. Nqobile Ndlovu is an expert on the business of sport. Nqobile, good evening. I think what we see from our rugby is sort of success on the field, big crowd, glitz, glam, trophies. What's the real state of the finances of our rugby?
Well, the real state of the finances, Stephen, and good evening to your listeners, is for the most part, the unions are struggling financially. But SA Rugby, because it's got the central funding model where essentially SA Rugby helps to fund everything, and they're so reliant on the Springboks as sort of a cash cow, SA Rugby also has struggled as a result of the joint collective financial strain. Part of it is the cost of participating in the URC is very expensive for the United Rugby Championship. I mean, it cost about 446 million in 2023-2024 just to participate in the United Rugby Championship competitions. And then there was other costs. The cost of even trying to do that private equity deal, etc., costs a lot of money. It costs about 13 million rand. So, yes, the individual unions are struggling. If you look at games outside of URC or the major URC games, like you would have seen this past weekend, Ellis Park is mostly empty. During Currie Cup competitions, stadiums are not really full, and so on. It's only the URC really which is a beacon of light, and the Springboks. The rest of the competitions further down are struggling for revenue.
I presume most of the revenue and the most important client of SARU is not me and not you, it's DStv and SuperSport. And that
Correct.
surely is where the money comes from. It's all about whatever that deal is. And DStv is not having an easy time of it at the moment either. I mean, basically the world is changing around us with regards to live sport.
Well, to be honest, actually, it's for those deals are signed 4 years, they're in 4 year cycles. So they didn't really lose money. Actually, they made more money from commercial revenue last year, 1.5 billion, than they did previously. So about 100 million more than in 2023. So they made more money there. And their total revenue also increased. However, the loss that they gained was massive from World Rugby events, because when you the 2023-24 at the beginning of the 23 cycle, the Rugby World Cup was counted into that, and the costs associated with playing were counted into it. There was 24 million extra in image rights costs for players, and then there was, as I said earlier, the participation in the United Rugby Championship competitions was massive. The costs associated with that are huge. And they bore into the overall loss of 93 million, plus also that write-off of 13 million for trying to do that private equity deal. But I will say that these numbers, while they sound bad, are not anywhere near what I expect they will look like in 2024 for next year. I think the picture is much prettier than what it looks like right now.
Someone somewhere, if they haven't already done it, is going to sort of use these latest figures as a justification for another equity deal. There'll be a lot of heat around it, whatever happens. But do you think it's still possibly on the cards? Not necessarily with Ackerley, not according to those terms, but in some way, shape, or form.
Well, I mean, I expect that SA Rugby revenue will go up to about 2 billion. I think they'll make about 500 million extra in revenue, which I think they're already pretty close to doing that, because from the F&B deal and Pick and Pay and Coca-Cola alone, they'll make about 300 million extra. I don't think, though, that the private equity deal will go away. It's just there's less need for it now. There will be less need for it. But I don't think it will go away, because ultimately we are still making less revenue than our competitors who haven't won as many World Cups as we have. But let's not forget, when we're talking about France and New Zealand and the likes, they're dealing in dollars and euros and pounds, whereas we're dealing with rands. And if we want to cover that gap, we have to be dealing in the same figures. So I don't think that the private equity deal will go away. But what I do know also is that SA Rugby has started charging in dollars and pounds in some of their deals. So maybe that's another way for you to say, okay, well, we need to globalize this thing a little bit more and attract international investors and international companies. But I don't think the equity deal will go away as long as we're not, on an equal footing with others that we compete with.
Does all of this explain why some of the ticket prices for this season for the Springboks look pretty high to me?
Yes, absolutely it does. I did a thread on it on Twitter a few weeks ago. The average ticket price of a Springbok game is about 11 times that of a Bafana game, which is the most popular sport in the country. And it has been like that for the last, and I did this over 9 years. It's consistently been that, and it's been increasing. I mean, you're not going to get a ticket for a Springbok game under 650 Rand now, or at least about 350 is the cheapest, and then it goes up beyond that. So yes, it all counts. It all goes into it. That image rights cost, by the way, that I spoke to you earlier of 24 million Rand, that was on top of what it was, so that it's higher now, and that is the cost of keeping the players in the country. The cost of keeping your best talent in the country. And to do that, you're paying more money.
Sure.
We've also now got a professional women's setup, which needs to be paid for. There's all of these things need to be paid for. And the Springboks are now a blue chip asset. They're not your run of the mill kind of sports team. They are now competing at a global level, and we will be paying kind of international prices now to see them play, unfortunately.
Nqobile Ndlovu, thanks very much indeed. What value do you put on a Rugby World Cup? Pretty priceless, really, isn't it?
Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
The Money Show.
The Markets.
Nqobile is the Chief Investment Officer at the Old Mutual Investment Group. Siboniso, busy day on Sens today. Alexforbes seem to be doing pretty well and, of course, helped to get that payout from AIG.
Yes, Stephen. Good evening to you. Good evening to your listeners. Yes, we've got 4 small caps. We consider them small caps because the biggest one, Forbes, is around close to 12 billion, and the smallest one we're going to talk about is in the 7 billions. And so if we start with Forbes, headline earnings up 15%, normalized headline earnings up 23%. They paid a good dividend. That was up 10%, and then they paid a special dividend. And when a company pays a special dividend, basically they're telling you that we've generated more cash than we thought, and so therefore we're going to give it back to our shareholders. So it's a good thing. And Stephen, one more thing about this result, one of the key drivers of it, they talked about higher market returns, and so they have more assets. Obviously, their assets were up quite a bit, and so therefore they make money off that. But also the two-pot system. I think South Africans retired, up until February, the number was at 43 billion. That led to an uptick in claims for them and admin activity, which also further boosted revenue. But healthy balance sheet, fantastic results, good cash generation.
PPC, they make cement. Their cement volume was down. Their revenue was slightly down, but they've done quite well in making a better profit.
Yes. Pretoria Portland Cement. This was actually, for this particular company, it was all about operational excellence. I think management did an amazing job, which they communicated, actually, if you look at the outlook last year, where management talked about they're going to focus on how to run a better business. And so revenue, I think, was down 1.9%. But their EBITDA, their cash flow profit, that was up, and actually their profitability was up, and even their dividend. Again, remember, dividend is the reflection of a strong cash generation. Dividend was up almost 30%, with their EBITDA up 28%. And where the key is, despite flat volumes in South Africa and Zimbabwe, their free cash flow was up threefold to 1.05 billion. And so Zimbabwe remained the star performer. And so Zimbabwe is actually generating some really, really good margins. And so that's been good. And actually they're doing some investment in the Western Cape. And so a business, tough top line, but management's actions below the top line actually were exceptional. And so good cash flow and good profitability.
Omnia also, perhaps, maybe you could say the same thing. They seem to be dealing with their chemicals business. They're sort of restructuring. They've spent some money on that, but sort of active management and mining helping them through it.
Yeah, no, Seelan has done an astonishing job in this particular company. I think we forget that when he took over where Omnia was, and Omnia was in the doldrums. And his active management actions have actually really built a far more robust and resilient company, and has also been forward-looking. So as a management team, they've done an exceptional job. And again, revenue was hardly anywhere, but actually if you look at the underlying and how they've managed what is a tough, because ultimately they've got three key segments. It's got mining, agriculture, and chemicals. And all of those, Stephen, are very cyclical and are very subject to the whims of whatever's going on in that industry. And so, yeah, again, with them, one thing I'm going to talk about, because cash is king. Their net cash stood strong at over 1.77 billion, and they paid out whatever 1.27 billion in shareholder distributions. And so, therefore, again, a reasonable outcome in a very, very tough environment.
And then Oceana, some of the details about them are fascinating. I mean, they're obviously in the fishing business. Fish oil prices have dropped because Peruvian anchovies have come back after La Nina. They had a slightly higher than normal hake catch. It really shows you how kind of the world affects them.
Yes. No, this is also a very, very complicated business in the fishing space. I mean, their most popular brand, Lucky Star pilchards. I mean, I grew up eating this. Now, Lucky Star, actually, that was up 35%. So you would think, wow, what an amazing outcome. And it was an amazing outcome. But as you say, Stephen, the fish oil and the fish meal, that was down 55% because of a 43% drop in fish oil prices. And so you can sell the same volumes, but if prices basically almost halve, that was a bit of a problem for them. And so therefore we saw their profits down about 44%. And obviously their dividend is also then down 44% just to manage that. And also, but with them, unlike the other companies we've spoken about, in all the others I've spoken about better balance sheet and good cash flow. Here in Oceana, given this particular result, there was a rise in net debt to 3.5 billion. And this balance sheet is a little bit weaker. So for me, I would ask the question, why did they pay a dividend? Why did they have to?
Nqobile, thanks very much indeed. Chief Investment Officer at the Old Mutual Investment Group. Just after 6:30.
7:02. Stephen is on X.
At Stephen Grootes.
Well, in some interesting reporting today, and I think a lot of people are talking about it in Joburg and in Cape Town, the possibility of Helen Zille, the chair of the DA's Federal Council, sort of coming back to the place in which she, I think, was born, spent her early childhood, and becoming its mayor. And it will give some heat to the debate, the sort of mayoral arguments, if you like, around Joburg, and maybe kind of energize both for the DA and, strangely and interestingly, for the ANC. The sort of whole election, the local election cycle might well become a focal point of it. But what did really strike me was the reporting by Freriel Hafaji today, and you might well have heard her earlier from Daily Maverick, and she's a colleague of mine, talking about the amount of money that goes through the city of Joburg. And over 900 million rand, nearly R1 billion rand's worth of contracts was given to companies that include family and friends of people who make the decisions in council. And the council's attitude seems to be, that's fine, nothing to worry about. I mean, it is just astonishing what happens and where the money goes. And does anyone see anything for it? 011 883 0702 021 446 0567.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Some interesting results from the cement mixer PPC today. Its revenue down 1.9%, still increased EBITDA by 28%. One of the big changes is it was able to reduce its costs in sales. Its financing costs were down too. Matias Cardarelli is the CEO at PPC. Matias, good evening. Really appreciate the time. Quite an achievement to make more money out of lower revenue. What changes did you have to make to the company?
Good afternoon, Stephen. First of all, thank you very much for having me. I have to say that I have been your listening since 2019 when I came to the country, so it's a pleasure for me to talk to you for the first time.
Welcome.
Today is a very important day for PPC. As you might know, we are a new management team that came approximately 1.5 years ago to the company. And pretty soon we realized that instead of just waiting for the market to recover or for the economy to improve in South Africa, we needed to look for internal opportunities to unlock value. And actually, we found a lot of inefficiencies in the business and a different, what we thought was a possibility to run the business differently and to bring efficiencies and ultimately results. Today, results are very encouraging. One of the main, for me, financial indicators is that we were able to improve 4 percentage point EBITDA margin in just 1 year, and to increase our cash flow generation in 306%. All those indicators were showing that it's possible to run PPC in a more efficient way and deliver better results, even in a scenario of growth or not growth. Where we focus in this first year, we focus, of course, in general expenses. We focus on opportunities in our operation, although early stages of improvement, but we were able to achieve cost reduction in logistics, in the way in our thermal consumption, meaning coal, in our electrical consumption. We were able to allocate better our products and our product mix, paying a lot of attention to which product we were selling to which customer and from which plant. So these early results, significant early results, are very encouraging, but this is just the beginning.
Your sales volumes for your South Africa and Botswana unit were down 2%. And I know there's a lot of competition from imported cement. Is that part of the problem, or is there less demand for cement overall?
I think that no, imported cement is not the main problem. What we have seen is no increase, no improvement in the cement sector and in the construction sector in South Africa, and for more than a decade. So we need to work on a scenario of not growth, and that's why we are focused on unlocking internal value. On the other hand, I mean, we have seen cement companies in the country running, in our opinion, the wrong strategy that look for volumes and look for market share at the same time of running their operations very inefficiently. The outcome of that is that you actually don't improve your top line. Actually, you damage more your margins, and you put yourself in a very complicated situation in terms of working capital to run your business. We have chosen a completely different strategy. We focus on competitiveness of PPC, becoming more competitive, meaning bringing results through margins and efficiency while we are becoming more competitive. When the time comes that we are a more competitive company, yes, we will go for market share, but not before that.
I understand you had higher revenues in Zimbabwe. Is there more demand? Is there more building going on in Zimbabwe?
Well, comparing to South Africa, yes, but it's not that we are seeing a market, booming in Zimbabwe either. The results, again, that they are coming from Zimbabwe, if you see the results announced today, we were able to improve 6 percentage points EBITDA margin in Zimbabwe, better cash flow, better working capital. So the results are pretty similar in both countries, higher in Zimbabwe, but similar in terms of from where we are getting the results.
You're building a new factory at your site in the Western Cape. I know people were quite critical of it, especially when there's a sort of oversupply of cement at the moment. Is that going to make a big difference? And obviously, I presume it will be more efficient.
Exactly. You're spot on. It's going to make a huge difference. First of all, the criticism we received in the beginning that now changed to a strong support, but was because, respectfully, I think there is a misunderstanding about the overcapacity in the country, in South Africa. Not all the plants are the same. All plants can compete with modern plants. It's not that it's the same and you can calculate capacity just taking all the cement plants in the country. That is exactly what is happening in our Western Cape. As a company, PPC runs the most modern plant in the Northwest another very modern plant in the northwest as well. But we were running two very old integrated plants in the Western Cape. That was not sustainable in the long term in terms of profitability, but also in terms of environmental impact. That is why we started 6 months ago in that project. We were able to land in a project that is going to the outcome would be building the most modern plant in the country, which is going to be huge, which is going to bring huge efficiencies to the company. Rough calculation, we are going to have a 30% decrease in our production cost, but also we have a very important impact in terms of our green agenda. We are planning to reduce roughly and conservatively 20% of our CO2 emission when we are running the new plant.
Sure, that's a huge difference. Matias, thank you so much. Really appreciate the time. Matias Cardarelli is the CEO at PPC.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, the financial services company Alexforbes talking about a change in how it's trying to give customers financial advice today. It posted a big 17% jump in headline earnings for the year to the end of March. Part of that, well, let's say an addition to that, is that it won the first phase of a legal case against the international insurance company AIG. That meant it received nearly £8 million in cash. Still waiting to see what happens with the second leg of that. Dawie de Villiers is the CEO at Alexforbes. Dawie, good evening and thanks for your time. It wasn't just that. You do seem to be making more money, and from what I can see, the operational side of your business is going quite well. Considering the sort of environment we're in at the moment, you must be quite chuffed.
Stephen, thanks for having me. Yes, we're very chuffed. You know, it's been a few years of hard work to put the basics in place. And as you rightly said, there's a few windfalls, but certainly the underlying business is performing really well in an environment where, you know, in SA Inc. we don't really have growth. So in order to grow, you must do some special things.
One of the big changes we've seen, obviously, is the two-pot retirement system, and you would have had to put money in to make changes to your systems to allow people to take money out. But now you might be in a position where you can sort of, you know, make more money back from all the activity that creates. Is that making a little bit more money for you now in some ways?
It is certainly a big catalyst for us into the future, Stephen. It's about making a little bit of money, but it's more about, you know, the engagement of members. So our goal is to engage more members, help them, give them advice. And Two-Pot has been a catalyst for members to actually care about their savings, care about their pension funds, care about their retirements and their wealth. And certainly we've had, you know, a massive uptick in engagement and people wanting to know. So the unintended consequence, you know, of the Two-Pot came to fruition, which is great for us.
If I understood your statement on SENS correctly, you're moving ahead with an automated financial advice platform. You say financial advice is a superpower. I know plenty of people who will agree with that. But how do you encourage people to talk to a machine and to trust it?
Yeah, I must step one step back, Stephen, because it's quite a big thing for us, and I think for the industry. We've always had this dream of providing advice not just to the top 10% through wealth management and the people that can afford advice, but to our whole client base, which is basically the working population. And certainly we've got elements of advice at the employer, and people can call in and talk to talk to the call center and talk to benefits counselors, and we've got all of these things in place. What we've done in addition is obviously to allocate actual advisors throughout, from planners to wealth managers to every corporate. So there's this easy access. But what you're talking about is that was the last step in our attempt to really give advice to everyone is automated advice. So we've got a system that is approved by the FSCA that any individual online can go through, and it's actually a very easy system. You say what your goals are, you say what your means are, and you go through it. You actually have a solution at the end which you can take or don't have to take, but giving advice. And at any point in time, you can just press a button and somebody will call you as a pure advisor. But you can certainly go online and do it. So now advice is accessible to anybody.
Doesn't it mean that everyone gets kind of roughly the same advice? Save more?
Actually, most people that will call in will talk about how do I save for something. So you're right, that saves more. And a lot of times the answer is save through your pension fund because of the tax benefits and the institutional pricing benefits. But certainly risk benefits is an important part of it. And if you think about, maybe decreasing your benefit, your savings portion to increase benefits because you've got lots of dependents or you're still young and so forth, that also happens. So I think it's very balanced.
You want to raise 5 billion rand, I think you call it, for an infrastructure fund of funds. We keep hoping and praying that more money will be spent on infrastructure. How will this fund of funds work?
Yeah, so we're a multi-manager and we invest in other funds and vehicles. We've launched this fund because of the demand and the need, with clients. Secondary demand and need is obviously for South Africa to get investments into infrastructure so that we can help grow and have an impact. But we actually have clients, and a lot of clients, including ourselves as investors, on behalf of clients that want differentiated returns, and everybody sees the benefit of these unlisted type of investments, especially if you're a long-term investor. So we're very keen on that. We've launched the 5 billion fund, and we've already committed 1 billion. And there's a good pipeline of clients that are interested in it. So, the narrative that we need prescribed assets and the narrative that, investors don't want to invest in infrastructure is not there. It's actually the other way around. As soon as we get, valuable and proper investments to invest in in infrastructure, the money and the allocation is there.
Dawie de Villiers, thank you so much. CEO at Alexforbes at 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Well, you'll find out how the state of Peruvian anchovies had an impact on a South African company in just a moment. Not something that we get to say every day. I wouldn't be surprised if somewhere in the sort of English-speaking world there is a band called Peruvian Anchovies. It's the kind of name that would stick with some people, I suspect. But we'll speak to the CEO of the Oceana Group, Neville Brink, in just a moment to see how it affected them. Also coming up, I love these stories, someone who's able to take a situation that they don't really enjoy, a difficult situation for them, and just turn it round completely. And Tuani Price did that. She's the CEO of Zuri Wine Tasting. Has basically been able to make kind of wine an event in Los Angeles and then in Cape Town. And it's not like she's growing it. She's drinking it for fun. She's making money out of it. She's doing very nicely, thank you, through wine events. So how to turn something and it all started from a sort of unfortunate incident with what do you call a wine steward or sommelier, something like that. It all started because of that. And things turned from there. We'll also talk about the future of money. Bronwyn Williams reads the most interesting books. She's looking at a book called The End of Money.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Well, good to hear from you as well tonight. 011 883 0702 021 446 0567 and voice notes this evening on 072 702 1702. Well, the fishing company, the group Oceana, reporting its Lucky Star Foods line delivering strong results. The company, though, did still report a lower interim profit. Headline earnings for the 6 months to the end of March down nearly 44%, in fact. Revenue was up 2.9%, but lower fish meal and fish oil prices did have a big impact. Neville Brink is the CEO at Oceana. Neville, good evening. Lucky Star doing really well for you. Where did the extra revenue come from? Was there a lot more demand for pilchards?
Hello, Stephen. Yes, thank you for having me on here. Yes, the demand for Lucky Star has been very, very good over the last 6 months. And it's not only Lucky Star pilchards. We've expanded the range that Lucky Star produces outside of pure fish, and we're now in canned meat and in canned chicken under the Lucky Star brand. And those sales have enhanced the performance of the brand. And in particular, our export countries, we are operating in all of the SADC countries, and demand from those regions has been strong. And just recently, we've gone into Ghana in the last year, and that has also done well. So across the board, consumers are looking for affordable protein that's sustainable and healthy.
I mean, we've seen egg prices sort of seesaw over the last 2 years. I mean, did that make an impact on what demand you saw for what you sell?
Yeah, we compete in the protein market, so it's not, we don't compete against other fish. We compete in the broader protein market. So it's chicken, it's offal, it's polonies, and eggs. You know, consumers are looking for a protein that they can use as an extender, so add with starch of some sort and feed a family, and that's where pilchards is value for money.
You also had better hake catch volumes. You caught more hake. How variable can that be? I mean, what leads to you catching more or less hake?
One of the major aspects is climate change, unfortunately, and climate change has become much more of a seasonal event than it used to be. So we've seen a El Nino effect, which is normal, but it's now much more frequent. And we came through an El Nino event over the last 2 years, but we were going into a more neutral zone, and that has, the waters have tended to cool down a bit, and we've seen hake catches pick up very nicely. The resource is certainly there. It's the catchability, and when waters tend to warm up, the fish disperse, and we tend to catch a lot less. But hake has been good, and certainly the demand for not only hake, from all wild-caught sustainable seafood is very, very strong, in particular in Europe, but also in Africa. So that has certainly done us well.
And let's just stay with the hake example. If you can't catch it because of the temperature of the water, is someone else catching it because of the temperature of the water there?
No. Generally, I mean, obviously we fish in our own fishing waters.
Yeah.
And, you know, obviously there are other competitors like the Sea Harvest and Nine Jays that are fishing hake as well. But we all tend to face the same problems. And they had like we did last year, was tough with catching hake. So nice to see that this year. And generally across the board, all of the southern African species are starting to improve with this neutral phase. So whether it be squid or lobster or hake or kingklip, or even to a lesser extent, we've seen some improvements in catching of the species that we operate in our waters.
Sustainability is becoming a new and a bigger thing, and there are all sorts of things to it, and fishing rights can be quite messy at times. There are political arguments over it from time to time. Can you be certain that what you're doing is sustainable? I imagine there's certain sort of criteria you have to meet before you can say that.
Very much so. Obviously, we are regulated by the South African Fishing Department, DAF, and they are they've got a very, very robust scientific review every year to measure the biomass, the state of the biomass, and they give us a quota that ensures sustainability. But we also, on the hake, we have an international accreditation body called the MSC, which measures our ability to catch fish and all of the other aspects, bird predation, bycatch predation, that kind of thing that really manages. And you're right, consumers worldwide are becoming so conscious about ongoing sustainability, and it's important for us. And generally, South African fisheries are well managed in that respect.
The other big variable for you was your fish meal and fish oil sector. And as I understand it, your competitors in South America battled last year again because of La Nina. They've come back now. Has that had a big impact on pricing in that sector for you?
Yes, and this is really a commodity market. I mean, all of us produce fish meal and fish oil, which is an ingredient in feed, both in aquaculture and it goes into pet food and it goes into pig farms. And worldwide, Peru is the single largest producer of fish meal and fish oil. They had a very poor season in 2023. It came right in 24, but because of the 23 low season, prices just escalated, in particular oil. That benefited us last year. They've had a better season. They had a better season last year, but a very good season this year, and we've seen prices normalize. In fact, probably overcorrected to an extent, and that's affected our US business. Still a good business, and it's a commodity market, and we'll have natural fluctuations. But we were certainly hoping that our other two businesses could offset some of the drops we saw in pricing, which unfortunately the drop was just too big.
You're in quite a competitive market. I mean, there are lots of different ways to sort of eat to eat food. Do you face a lot of competition from imported frozen fish? Are you finding that that's a problem for you?
No, in fact, we're the largest producers or largest importers of frozen fish because of the Lucky Star brand. we don't have enough of our own catch to supply the brand. We probably produce from our own vessels about 20% of the demand. The brand has grown to such an extent. So we import over 100,000 tons of frozen pilchards from all over the world to produce in our own factories. There's not a lot of imported other frozen fish into South Africa. We produce horse mackerel, which is a low cost protein for the African market. But we see ourselves competing in the protein market. So our competitors really being chicken and, as I said earlier, chicken and bolognas and offal. That's really the space that we play in.
Thank you very much indeed, Neville Brink, the CEO at the Oceana Group. It's fascinating to get under the skin of some of the companies that we've been speaking to this evening and just find out a little bit more about how different parts, different sectors of our economy are actually doing, whether it's financial advice with Alexforbes, whether it's Omnia with mining and chemicals, PPC as well, of course, telling you what kind of construction is underway and what kind of construction is not. I was fascinated by the comment there around what's happening in Zimbabwe. It seems that volumes of cement being sold are increasing in Zimbabwe, but not here. More construction underway in Zimbabwe, perhaps. Who knew?
The Money Show.
Business Books.
20 minutes now, 19 minutes, I should say, after 7 o'clock. Well, we do run for you a show called The Money Show, which is why we were particularly interested in a book called The End of Money by David Buckham, Robin Wilkinson and Chris Strowley. Bronwyn Williams, partner at Flux Trends, has been looking at this. Bronwyn, good evening. I mean, I can't see that money will ever have an end, but this is really about a lack of trust in Western institutions and, dare I say, a group of people who've maybe brought it upon themselves.
Yeah, it's definitely a book about trust or lack thereof and what we get when trust breaks down. But it's far more than just a critique on the Western side of the market. They also have equal and opposite concerns about what's happened with, say, the more Asian sides of the market coming out of the more kind of Beijing consensus. But in essence, this book is kind of an accelerated history lesson with a little bit of futurism thrown in, a sort of fast-track recap of the last 100-ish years when it comes to money, that is the people who look after it, our banks, and of course those who regulate it or fail to do so, that is our governments. And what happens when the trust in the systems that underpin our entire global economy, but also critically, as they point out, really that underpin our social contracts. Both the more communist and the more capitalist social contracts are underpinned, of course, with this idea that you need to contribute, do your bit. In exchange, you're going to be looked after by your society. This is how you get people to do things. And when people feel that doing things, that participating in the system doesn't get them what they want out of the system, we get a breakdown in trust first. And as we've seen with the more recent updates of the Alderman Trust Index, which of course looks at trust across the world, that a further deceleration or watering down of trust in society leads to grievance. This idea that by contributing, someone else is winning and I am losing, which is a very dangerous place to be. And in essence, the book is a warning against what happens when trust breaks down. Well, when trust breaks down, we revert to a state of nature, to anarchy. And one of the perhaps more controversial ideas that the authors come up with is that cryptocurrencies, Bitcoin in particular, but the idea of crypto in general, is in essence a symptom of anarchy. So it's a trustless system, which of course both proponents and critics of things like cryptocurrencies will admit to. But this idea that a trustless society is really an anarchy, a place where no one is safe, and that we kind of need strong financial institutions and strong regulation in order to keep ideas like democracy and, of course, even the more sort of authoritarian systems stable and going, if not at least growing. So it really is all about trust, as you said, and what happens when, well, we don't have much of it.
So, I mean, this is it gets to the heart of it, which is that I find it difficult to understand why people would trust a system created by someone who we don't even know their real name, rather than Lesetja Kganyago, where I kind of know where his day job office is, if you know what I mean.
Yeah, so if you're talking about, of course, cryptocurrencies, there's all this mystery around it, and it is a system that is based purely, essentially, on belief in the system, of course, but also belief in maths. And this is where it gets quite interesting. The author's criticism of cryptocurrency is that, in essence, the ideas of cryptocurrency, this idea of a trustless system based on maths, is not all that unlike, at least in the view of the authors, the blind faith we're supposed to have in our more formal fiat currency monetary systems, where we're supposed to believe the maths of like the Black-Scholes model that'll tell you the exact risk of a derivatives market trade, lol, or of course the maths that'll show you that modern monetary theory, or QE, can totally be a sustainable long-term solution for a degrowing world, for example. Or in the case of China, and actually in the West too, as they point out, the idea that debt can kind of be kicked, that can of debt can be kicked in almost multiple times down the road without consequence. These are all very big stories that people are being asked to believe in the face of slowing and degrowing real life day-to-day experiences with the economy and what they put into it and what we get out of it.
I mean, there's so much to it, because while this has been happening in the West, payment systems, the way that people understand money seems to have changed rapidly in China.
Yeah, so this is, of course, the compare and contrast. They kind of alternate in the book between a bit of Western monetary policy history and Chinese monetary policy history. And they see some of the things that are very, very similar. The ideas that, of course, that growth at all costs is a good thing. But also they look at how, in essence, what's happening now as we sort of fast forward to the second decade in the 21st century, that it looks like there's this kind of trade-off between growth and control. And the West has largely, by and large, chosen growth over control. And that has led, of course, to anarchy and the absolute explosion in private currencies and cryptocurrencies and all sorts of weird and wonderful financial instruments that, of course, allow banks to play with each other's money and our money, with the sort of underpinning of perhaps being bailed out by future taxpayers. That's become kind of the norm of the system there, which is corrupt in its own way. And China played that game for a while when it was growing fast. But the book's authors argue that China is increasingly now, as they were writing this coming out of COVID in about 2021, 2022, I think it was published, they were saying China looks like it's deciding to go in the other direction and choose control over growth as a different sort of path forward. Now, whether those predictions play out or not, it is an interesting kind of dichotomy they pick up on there. What do we really want? What do governments really want? And what do people really want? Do people want the flip side of control, which is, of course, security? Do you want control and security, or do you want growth and risk? And quite frankly, the answers to those questions haven't been answered well by any current global power, which is why the authors say you've got space for these absolute anarchist ideas to come into the picture, to solve that equation in a way that feels more palatable to a general global population that is not pleased with the status quo, whether you are in Los Angeles today, or whether you are in the lying down flat movements in China, or whether you are a South African who is unemployed. The economy isn't working out for most people. And this is, of course, where space for chaos can creep in. And I found it very, very interesting reading the book, given that a lot of my research over the last couple of years has been at exactly that, how many of the people faced with an unfair system can turn either to anarchy or to apathy, right? Or to a sort of lesser extent towards some form of activism. And it's interesting to kind of see those same sort of strains playing out in people's responses to an increasingly unfair, or at least seemingly unfair economy.
I was intrigued by the fact that the authors are sitting here in South Africa talking about kind of the rest of the world. And I mean, there's a lot to say about our economy, but the rest of the world does affect us. So I was just intrigued by that. Do you think they bring something to it that maybe other people have sort of missed? Is there a South African understanding, perhaps, of, you know, an attempt to sort of be, what's the phrase I'm looking for, aggressively non-aligned, that maybe helps us understand it in a way that other people don't?
Well, personally, I do agree with that philosophy. I've spoken quite a lot about this in my work in looking at economic futures and looking at foresight and future studies too, South Africa is quite uniquely positioned in between, very literally, East and West, Old World, New World, the petro economy and the tech economy. We've got loads of startups in Cape Town. We're a little bit of a patchy economy. And we've got mixed, as you say, alliances in terms of which sort of faction wins out in the future. Well, we've got irons on a lot of those fires, right? So we can have a little bit more of an objective perspective, but we also are at the forefront of really experiencing a lot of the theoretical ideas, which again is one of the big ideas criticized in this book, this idea that maths in theory doesn't always translate into economic prosperity in practice for people. We've certainly tested out a few of those ideas for ourselves, for better or for worse, and that gives us a bit of perspective to write. It is important to note that this particular book doesn't come, although it's written by people who have history in South Africa, it's certainly not a South African book. It is a global book. It's trying to look at the global perspective, and that's quite interesting. Usually these books are either written about the American monetary system, assuming the American monetary system is the only monetary system, or looking only at either critiquing or condoning, or of course advising, like the East as being our global future. They've tried to give a bit of a balance between the two. They're not exactly sold by either worldview at the moment. What I didn't see them make too much of a connection with is just how tied the two worlds are in our global economy. I would probably have liked to see a little bit more about that. But South Africa itself barely gets a mention unless they're sort of comparing global statistics, of which South Africa might pop into the pack. I say they're looking at unemployment figures or national debt to GDP ratios, just to kind of see the spectrum of where countries sit in the world. So it's certainly not a South African book, but I do think South Africans do have a bit of a unique and interesting perspective to bring to global conversations. And it's something that we see in terms of our actual geopolitical, influence in world affairs. We're quite small, but we have more influence than perhaps the size of our economy demands, just due to our very unique position between all the various different global players across the global economy.
Bronwyn Williams, thanks so much. Trend translator, future finance specialist at Flux Trends. The book is called The End of Money by David Buckham, Robin Wilkinson and Chris Straley. Bringing the time to 7:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
So imagine this situation. You just imagine this situation where you sort of realize that you're in a position where you actually don't know anything about X, Y, and Z. And all the people around you know plenty about it. And you can find it a bit frustrating, maybe even a little bit humiliating. And so you decide then and there, I am going to be an expert on this. Well, Twani Price had exactly that experience. And she didn't just become an expert on it. She's now been making her living out of it. I think it might have helped that the subject was wine. Twani Price is the CEO of Zuri Wine Tasting. It's a company based in Cape Town, but also in Los Angeles. Twani, good day to you. You were actually living in LA when that happened, right? Someone was, what's the right word, quite snooty to you about wine.
Be snooty, yes. I was at a restaurant, a 5-star restaurant. It was my first time dining at a 5-star restaurant since my dad took me to dinner after I graduated from college. And the sommelier there was very snobby. And it just encouraged me to learn as much as I could about wine.
I mean, I must say, I'm a bit like you were then. I don't know much about wine. I can talk about whiskey all night, but my wife is the wine expert in my family. Was it difficult to learn? I mean, is wine kind of hard to talk? Is it hard to talk wine?
I think it's difficult when you first think about entering wine. But once you start learning about wine, wine is related to culture, it's related to food, to history, and it's so fun. I actually started to learn about wine through food. So I would have a wine club with my friends, and one person was responsible for the wine and for the food. And I mean, like, that's the best way to learn about anything, right?
What was it about it that made you so determined? I mean, okay, sure. You have a bad experience. I can understand that. And you kind of want to show them. I've been like that too sometimes in my life. But was there something about wine that really grabbed you?
Well, it was before the dinner, right? So I worked for a 5-star hotel, and when I worked in accounting, I used to work in finance. And so I would have to walk from one hotel to the next hotel property. And I would walk through the lobby and there were all these beautiful people with wine on the table. And they either looked like they were having a business lunch or they were having this girlfriend lunch and they were just having this amazing time. And I said, you know what? I want that lifestyle. So for me, wine is not just about like the beverage that's in your glass. It's about the entire lifestyle. And that's what I craved. And so my manager said, you're doing such a great job. Go have dinner in the restaurant. It's our treat. Take whoever you want. And when I went to the restaurant, that's when the embarrassing incident happened. And then that just sparked me to learn even more about wine. And the more I learned, the more I fell in love with the culture and the lifestyle. And then I started a business.
When if someone decides I'm going to learn about wine, and a lot of people will say, well, I'm going to learn about it by drinking it, but there's a lot of other stuff that you need to know. You need to know how to spell, what's that word? Terroir, the soil out of which the grapes come.
Terroir, right?
Terroir. There we go.
Yes.
Go on.
And you have to know, like, why. I mean, the part of the fun for me is learning why wine tastes a certain way that it tastes, right? So orange juice, no matter, it usually tastes about the same, right? Orange juice tastes like orange juice. But wine, Cabernet tastes totally different than Syrah. A Sauvignon Blanc tastes totally different than a Riesling. And they're all made from grapes. So why do they taste differently? Like what happens in the vineyard? What happens in the cellar? Why do they taste differently? So wine is not, it's not simple. I always say that my motto for my business when I first started, and it's still my motto pretty much, is wine is complicated. I make tasting simple, right? So it's really complicated how you get to these different layers of flavors.
I mean, that's the joy of it, or so people tell me, is that, sometimes bottles can even be slightly different. There should be some standardization, but it is so varied, you don't really know what you're going to get, and there are very different flavors to sort of look for. There's an experience to wine, the smell of it, how it sort of moves in the glass, all of those things.
Yes. And like you're right, different vintages can taste different. So a wine that you drank in 2020 can taste totally different than the wine that you had in 2022. And then it starts a conversation piece. And that's why I really like wine too, because it sparks conversation, right? Because now you're talking about why the 2020 vintage tastes different than the 2022 vintage. If you remember 2020, it was very, very cold that year, right? So the wines are a little bit tighter. They're not as fruit forward as the 2022, which was a warmer winter, a warmer year. So it just sparks conversation. And obviously I love talking. So yes.
What's the best way to learn about wine? I mean, you could probably go online and come back with a vast amount of information about wine. I'm sure there are winemakers, blogs, and grape farmers' blogs, and all sorts of things that you could just learn from that. Is it better to be a bit more structured about it?
Yeah, I mean, I think that structure is the best way to learn about wine, right? Just to read about it, to study like you would study anything else, right? But the best way to really experience wine and learn it in a practical way is to taste with friends, to just taste whenever you can, taste bad wine, so-called bad wine, taste so-called amazing wines, and see, okay, like, you know what? I had that wine. I thought that wine was a bad wine. And I had this wine. I thought it was amazing. But what's the difference? What is it? Maybe the wine that you thought was amazing had really nice acidity. Maybe you can actually identify some of the flavors and some of the aromas in the wine. There's just different things. And for some people really like sweet wine. I don't like sweet wine. So not unless it's like, the Melanu Ela Rosa, I probably wouldn't say, oh my God, this is such an amazing sweet wine, right? And the reason that wine is so sweet is because it's so complex, right? It has so many different layers and flavors. And for me, that makes a good wine. But if you don't like all that, you just might like a simple, like, what is that wine? I'm not going to even say the name, but you just might like a nice old J. LaRue wine, right? That you use for a celebration, and it's sweet and it's easy to drink. So, yeah.
So how did you start? I mean, did you start on the internet? Did you watch wine videos? Did you go to events? Did you take a formal class in winemaking or something?
I definitely took formal classes. So I started with the wine club with my girlfriends, learning about wine, and then I started studying with the Society of Wine Educators. I was in the West Coast in the United States, and then I studied with the North American Sommelier Association, and I was just always taking wine classes. And then I started to travel for wine, right? Because it was so fun learning about these different wine regions. And then I would go to them. I'd learn about Barolo. Then I'd go to Piemonte and I'd taste Barolos. I'd taste Prosecco in the city where it was actually made. And that's how I actually ended up in Cape Town. So I was doing this whole thing of traveling. I love Spain. I love Spanish wines. And I was like, you know what? I'm going to move to Spain. And then I was like, wow, before I move to Europe, I need to visit the motherland. I have to come to Africa. And I picked South Africa because of its history with apartheid. And I picked Cape Town because it was so close to the winelands. And I came here and I stayed for 3 weeks. And I absolutely just love the wine culture and the wines in Cape Town, in Stellenbosch and Franschhoek. Yeah.
So you were then trying to make a business out of it. Now, that's a different thing. It's one thing to learn about business, to learn about wine, but to actually make a business out of it. How did you go about doing that?
I was working in corporate America and I was doing very well for myself, but I wanted like a side business. And I said, okay, I want this side business in wine. And I thought, how can I make money with wine? And I came up with this business idea, in-home wine tastings. You know, like people have like Mary Kay parties, things, Tupperware parties. So I said, you know what? I'm just going to go to people's houses because I love talking about wine and sharing all the knowledge. I was doing this in my house. I would invite my friends over for wine and for food, and I'd teach them anything new that I learned about wine. So I started this private in-home wine tasting business, and it was so much fun. So I would get wines from this store, very fancy store in Los Angeles, and snacks, nice wine bites. And then I'd come to people's houses and I'd show them about this wine and how it paired with these snacks, how to pair wine and food and what to look for in the qualities of wine. I remember I just had a standard menu. I had a Sauvignon Blanc because it's easy to teach about Sauvignon Blanc because the flavor profile is usually the same. You could taste the Sauvignon Blanc and know it's a Sauvignon Blanc. The acidity, the herbaceousness. And then I would do a Riesling because it was a little bit sweet, and I would pair that with like something spicy. And then I do a Pinot Noir because Pinot Noir is the lightest of all the red wines for the most part. And it was easy to talk about that. I just wanted to make it really simple so people can just get the basics of wine. And then I do like a Syrah Cabernet Sauvignon. And it became really popular. Like I was featured on this website called Groupon, and I sold like 250 units. So like the first year of my business, I spent the entire summer hosting private in-home wine tastings. I do one on Friday. I do like 3 on Saturday. I do like 2 on Sunday.
Sure.
And yeah, I didn't really have a lot of resources, and I just, prepaid for the wine class. Bought the supplies with that, and that was a very simple business model when I first started.
Could you have done this, without social media? 30 years ago, you would have had to, and we spoke to someone else in the start, and when she started her business, it was a sort of personal gym business at home. It was pamphlets under windscreens, leaflets under windscreens. You started yours in the era of social media. Did that make it easier?
I think social media made it a lot easier. But, I think the best thing and the best advice that I would give anybody who wants to start a business is like search your network, right? Like my first customer was a coworker's cousin who hired me, right? And I did such a great job, so use your network, do a great job so you get referrals. And so then I got referrals. And basically my business when I first started was, it was social media because I used Groupon. It was just like a social website. And then it was referrals, word of mouth.
Twania, you don't have to answer this if you choose not to, but I thought I might ask because you're sort of from there. But we're seeing, the pictures coming out of Los Angeles at the moment are awful. Really, the sort of what the US President Donald Trump has done, federalizing the state guard and all the rest. Are you speaking to people there? Are you there now even? Are you finding is it quite a difficult situation, do you think? Whenever I've been outside of South Africa and seen things happening back home, you really feel it.
Yes, I'm in Cape Town right now. And it's very difficult. And I feel like it's difficult all over the country. I'm born and raised in LA. LA raised me, and I could say that I'm proud of my people in LA for pushing back and not just accepting anything. But yeah, I am worried. I'm worried about the entire United States under this hopefully temporary regime.
Twani Price is the CEO of Zuri Wine Tasting. We'll ask her about sort of starting the business again in Cape Town in a moment on The Money Show. It's 10 minutes now to 8 o'clock.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
How I make my money, your guest this evening, Twani Price, the CEO of Zuri Wine Tasting. Twani, I mean, so you had your business going in the States. You now have to come and kind of do it in South Africa. Was that a little harder? I mean, you had the experience of doing it before. It's a different market, and I'm told this is true. I have no idea that people in Cape Town think they know a thing or two about wine.
I know a lot about wine, and that's one of the reasons that I wanted to move here and start my business here. And it's a beautiful thing, right? But there's so much to know about wine, and there's so many wines to taste that it's not like there's a monopoly on it. But when I came to Cape Town, and, you know, part of my business when I lived in Los Angeles was to focus on people of color in the wine industry, because you don't see a lot of Black sommeliers, winemakers, viticulturalists, especially in the United States, especially at that time that I started. When I came to Cape Town, South Africa, and I went to Stellenbosch, I saw a different story. I saw so many people in the tasting room, sommeliers, winemakers, things like that, that I could really relate to. And I was like, wow, it's like I found my tribe. So, before I came, and every single time that I was coming, I was doing research and I was building community. So before I came in 2016, I reached out to a few different people. I literally just had this email template that said, hey, I'm coming to Cape Town. Can we be friends? And it was a Google search that I did, and it basically said Black people in wine, right, in South Africa. And so that's how I did the research. I found out about Tinashe Yamaduko, who at that time was the head som at Test Kitchen. And at that time, it was the number 26 restaurant in the entire world, right? It was number 1 in all of Africa. So I reached out to him, hey, can you be my friend? Can we talk? Can we have some wine or whatever? And he said yes. And then we connected and we became friends. And I reached out to Nqobile Ndlovu. Nqobile Ndlovu, of course, she was the first woman, Black woman, to graduate from Stellenbosch University as a winemaker. She had her own. She was developing her own wine brand at that time. And so I reached out to her, same thing, and we became friends. And then I volunteered for this organization called PYDA, Pinotage Youth Development Academy. And that was the most magical experience. And I got to meet all these young people who were building a career in wine, and they were starting off with education, and it was giving them a pathway for jobs, for their own businesses if they wanted to. So I got really excited about what was happening in South Africa. And not only that, you know, even though I was focused on, you know, supporting Black wealth and growth, other people were super nice to me. So that was 2016. 2017, I came back and I just kept building community. And then in 2018, I said to myself, you know what? You should move to Cape Town, but I need to figure this out. I need to figure out how it's going to work. I was still working in corporate. I was like, you know, what kind of visa do I apply for? What happens, right? So I said, I stayed here for 3 months. And I volunteered at the Torrent during harvest. So I would just show up and I'd just be like, hey, do you guys have something for me to do? So I worked in the cellar at the Torrent, and they were super sweet to me. And I got to work with one of the best winemakers in the country. So it was a really amazing experience for me. And I joined this group called Black Cellar Club. And then I just started connecting with more people in the wine industry. So it, you know, I wouldn't say that it's easy. It's definitely not easy. But I just felt like there's steps that you can take if there's something that you're passionate about. And that's just what I've been doing ever since I first visited in 2016, was just building community first and then leveraging that community for a business. Yeah, I can go on, but do you have another question?
No, plenty of questions. No, it's a fascinating story, and you've told us a lot about kind of how the world works and how you work, which is great. I do have a different question to ask, and I ask this as someone who doesn't really drink wine at all. And I've been to, just for fun kind of wine tastings. You wouldn't know what you were drinking. At the end, it would be revealed and people would be looking at price. And a couple of times, the cheapest wine would be the one that sort of people like the most. I remember watching two young men. I was much younger at the time. And I realized the competition they were having when they were tasting the wine in front of a big group of people was who could talk the most nonsense about the wine. This wine was harvested, the sun was coming across, the wind was blowing like this, a helicopter was in there. I mean, they were talking utter nonsense. They were having a great time. And where I'm really going with this is, how do you determine what's really good and what's really valuable from what can sometimes, to some of us, come across as, I don't know, just a little bit silly?
Well, and that's a very great question. And I'm going to come in person and teach you a wine class. I'm going to give you a wine class. But okay, so you ever heard somebody clutch their pearls and they're like, oh, I was drinking a 1967 Bordeaux, right? Very fancy. And they think that they're very fancy. Most people would not like a 1967 Bordeaux. Now, me as a wine connoisseur, as a sommelier, I would die to taste, I wouldn't die, but I would love to taste a 1967 Bordeaux. But it's going to have flavors that only a discerning palate would appreciate, right? Because it's going to have these tertiary flavors. Tertiary is like the third layer of flavors, right? And these flavors come from aging the wine. Now, most people don't like aged wines. Most people want their wines to be fresh, fruity, acidic, right? And they don't want these stinky tennis shoe aromas, musty armpits. And I describe wine in a very uncouth way. Like my friend, she hates it because I'm like, it's the truth. This wine smells like musty armpits, right? But I love it because it doesn't taste like that. It tastes like fruity. But that's the fun part of talking about wine for me, is sometimes talking about the nonsense and discovering that you actually do like these things, but not everybody does. So the best wine for me might not be the best wine for you, especially since you're a novice, right? And if you told me, oh, I don't really drink wine, I probably could recommend a really great wine that you would love,
Twani Price, has been amazing to talk to you. Thank you very much indeed. Really appreciate it. The CEO of Zuri Wine Tasting started a business first in the States and now has managed to start it here. Twani, thank you.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Plenty going on, of course, in the money world tonight. Everybody, I think, is probably going to be watching those talks between the US and China taking place in London. US markets finally turning up just a little bit at the prospect of that. The situation in Los Angeles, I think, still, of course, might be weighing on some minds as well. And all in all, quite a positive day for the big companies that reported here in South Africa. We'll be back tomorrow. Don't forget Personal Finance tomorrow. It's just gone 8 o'clock.